Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I'm going to talk about the methodology in action. We have a new mystery chart. There's no new trades going into my next 100 trade series. I did make a couple of trades doing ChartCon, but those were on somewhat of a delayed basis. It would have been hard to follow along, and they also were for demonstration purposes only. One worked and one didn't, and when we're done with all this, I'll add those into the end, just in case you wonder about those. As far as the focus this week, I want to get back on the trade series, and more specifically, your brain on trade series. But at the last minute, I decided to talk a little bit about managing expectations, and then hopefully we'll have enough time to get into some things that you can do toward the end, where some tools, I should say, that you could use to help deal with a lot of these issues. And if not, we'll cover those next week. By the way, housekeeping, I do take requests. If I can't fit them into this show, you can come to the live show. Submit them ahead of time, of course. It makes my job a lot easier. But you can come to the live show that I do every week, DaveLandry.com/webinar. And these shows will be back live soon, and we have some exciting announcements possibly in the works, but I don't want to put the cart in front of the horse there. But you might be seeing a little bit more of me on StockCharts. By the way, speaking of StockCharts, if you want the slides from this presentation and a lot more information on trading, including my 3 books in PDF format and a bunch of other stuff to keep you busy for a long time, you go to DaveLandry.com/StockCharts and get to know me. If you do need to reach me, DaveLandry.com/contact, and the weekly webinars, DaveLandry.com/webinar. All right, let's talk about the mystery charts and the methodology in action. Here's the mystery chart for this week. We're going to buy based on 100K account, a hypothetical 100K account, although I do take these actual trades. 36 shares. Obviously, you can round up on that or round down, depending on how you want to do that. And it's a first thrust. So here are the parameters. Entry at 385, stop down here, initial profit target up here. Remember, no trade unless it triggers, and once it triggers, we're going to make sure we put a stop in place just in case we're wrong. We take off half of the shares, should it hit the initial profit target. And I hate to use the word hold, but hopefully ride it out for a long, long time. So there's the mystery chart for this week. We finally had a long side trade set out. All right, let's talk about your brain on trades for the Mind Your Trade series. Now, as I said earlier, I have a little sidetrack here, expectations. I woke up thinking about trading expectations, and it's kind of funny, kind of reminds me of a buddy of mine. It's like, Dave, the things you think about now have changed. The things you wake up thinking about have changed. And when I was dating Marcy, she came complete with a young daughter, and we cleared out all the furniture from the living room, and we set up a little musical chairs thing. And one of my friends, who's a little dopey, he says, Dave, your parties have changed. So Dave, what you wake up thinking about now has changed. Now, getting back to expectations, along the lines of expectations, another thing I was thinking about this morning is I was asked to go to Russia. I guess it was maybe 10 years ago. And a friend of mine I met through the AAPTA, Roman Bogomazov, was with me there. We were walking through Red Square. What happened was, long story endless, I was asked to go to Russia by this organization, and a lot of the website was in Russian, and I had him read it for me, and he said they look legit. So I recommended they bring Roman along too. And that didn't pan out, but a competitive, or one of their competitors, asked him to go. And then ironically, he said, well, let's bring Dave along. But anyway, long story endless, we were walking through Red Square, and I'm just fascinated with Russia, and I'm looking around and everything. And Roman, I guess from being there, he's just talking trading. And he said, when I put on a trade, he looks over at me, he goes, when I put on a trade, I have no expectations. And I'm kind of messing with him a little bit. I was like, you have low expectations? No, pay attention. I have no expectations. And that's kind of one of the things that came up over the weekend quite a bit, is no matter how good your analysis, we all know that we can be wrong. By over the weekend, I mean at ChartCon 2022. And I am often wrong, but never in doubt. Now, I'm never in doubt when I go into a trade. That means I actually do have high expectations, but I know that I could be wrong. Now, after reading The Middle Edge in Trading by Jason Williams, and that's Larry Williams' son, by the way, one of the things he suggested, which was a great takeaway for me, was to take a test on your psychological traits. And one of the traits that I found out, which is very bad for trading, is that I scored off the charts, not even on the charts, in agreeability or agreeableness. And I remember going home like it was this great epiphany. I told my wife and daughters, and they look at me like I pooed my pants. Kind of like the look they gave me years ago when I went into Starbucks and asked for a cup of coffee, Anyway, again, I learned one of my flaws is that I do have these high expectations because my agreeableness is very, very low. But I do know in the back of my head that I will be often wrong. And it kind of reminds me back in the hedge fund days. I worked for a hedge fund, and I think I was wrong a couple times in a row, whatever. And I was talking to the trader, the manager, I should say, and he was saying, "Well, Dave, we had a guy before you, and he could never make a decision." And he's like, "At least we know where we stand with you." And that's a big thing in trading, is just making a commitment and then following through with it, and realizing no matter how great the trade is, that you could be wrong. And again, that's one thing that seemed to come up over and over again at ChartCon. And one thing that I heard was strong opinions loosely held. And that means that you are convicted when you go into a market, but then you have to realize that anything can happen. One of my problems lately is the volatility. I haven't fully adjusted for the volatility. And on the intraday stuff that I'm doing, I'm getting stopped out a lot because I haven't fully accepted the volatility of the market. And I'm expecting everything to work like it has. But anyway, you have to have no expectations going into a trade, or expect that you're going to be wrong a lot. And then what you do to compensate is you want to make better and better decisions in the future. But even the greatest decisions in the world could still not work in the markets. And that's really hard, being wrong a lot. And that's okay. Now, along those lines, it got me thinking about know your nuances. And I did get some really nice emails, one in particular this morning, about that presentation that I did a few weeks back for Trading Simplified, where I talk about the methodology nuances. So a lot of that's going to be repeated here. And people often ask me, Dave, what to expect? Well, you got to remember that every methodology has its nuances, and people will come onto my trading service, or they're thinking about it, and they'll say, what exactly can I expect? Well, before I get into the answer to that, you have to realize that there's no guarantees, obviously, in trading. And if you think about the casinos for a second, that's a multi-trillion-dollar business. And forget about the slot machines, but the bigger games, the high-stake games, their edge is very, very, very small, maybe 0.5%. But they can count on that edge always being there. Now, I know I have an edge, but it's very hard to quantify how that edge will work. And I know that it will work over time, but it won't work all the time. And that over time, waiting for that big trade to come along can be really tough, especially when you're losing money in the meantime, and especially when you need money. And who doesn't need money, obviously. Now, one thing I'll just come out and say, expect to spend a lot of time less wealthy. And that's just trend following. Markets back at fill a lot. You'll get stopped out a lot at a loss, just waiting for that big trend to come along. Big trends don't come along every day. And as I said last week, and I'll show you the graphic from that real quick, expect the money to come in chunks. And that'll make more sense in a few seconds. Now, also expect to be bored to death, give up, and then watch the portfolio take off without you. As I've said ad nauseum, one of my clients once was following along, and market got a little choppy, and he quit because he was really busy, and he was still on the service. And then one day he pulls up the portfolio, and we were absolutely printing money. It was one of those elusive type of print money periods in time. And believe me, they don't come along nearly as often as I would like them to. And he said, Dave, I feel like I broke up with my fiance, and the next Saturday night she won the Powerball. And that's what it could feel like sometimes. And that's the tough thing. And I'm glad I got this email this morning about how important it was for me to talk about know your nuances, because getting those expectations down and knowing that over time you're going to do just fine, but you're going to have to get through those periods in between where you're waiting for those big chunks of money to come along, waiting for that print money phase. So just real quick, this was a graphic of some or the last 2 years or so of my trading service. You could see that the money tends to come in chunks, and then you spend a lot of time treading water. Now, the last little chunk in there is a mark to market, I should say, a trade instead of a closed trade. So these are all closed trades, but you can see that even if we sort of smooth it out by doing a mark to market on all these, and if we mark to market, he tried to say, that last 20K or so, and this is a hypothetical 100K account, although I do take all the trades, as I said earlier, I believe. It would smooth it out a little bit, but even still, you could see that you spend a lot of time just kind of treading water. And that's trend following. And trend following, in a pure trend following sense, I should say, you're going to be wrong about 72% of the time. And that's really hard to be wrong that much, especially from a psychological perspective, and even from a neurological perspective, as I often say, because losing money hurts, and you have twice the emotional impact as you do when you make money. And if you start making a lot of observations, as we're all guilty of doing, then just the observation in and of itself can be painful overall. And as I said last week or week before, or last show I should say, as Greg Morris once said, markets only make new highs about 4% of the time. And just getting back to the longer term trend following, by the way, you're going to be wrong a lot. The drawdowns are abysmal, and the taking of the initial profit target, taking them off half of those shares when that's hit for that swing trade, and then letting that stop loosely trail, that swing trade stop becomes a longer term stop, is my way to try to solve for that. As I often say, you've got people like the Turtles who came in and did all these amazing things, but they happen to be in the right place at the right time. And even halfway through their program, they realize, or at least Eckert, I believe, or Dennis realized, that their risks were way out of line and they were on the cusp of blowing up. And so they scaled way back their position sizing. And not to take anything away from them, because it was an amazing thing what they did, but there's not too many turtles left. And I know firsthand of some things, or secondhand at least, of some not so good things. And again, I would never be schadenfreude, because this is a tough business, but I think they were sort of in the right place at the right time. Now, as I talked about last week, or last show, I should say, the Verve trade, you can see, even though it did okay overall, there was a lot of backing and filling, and all the red is when you are spending time less wealthy, and there's only a few little green periods in here where you actually did well on the trade. And the other thing to realize is you did give up some profits in the end, $1,200 worth of profits, but overall, we did okay on the trade. And if you focus on what you lost at the end, as I often say, all trades eventually end badly, then you're going to be depressed even though you're making money. And sometimes, as I've said quite a bit, when people get stopped out at a profit, I tell them, and they're bummed out because I gave up some open profits, I say, well, look, just send me that money and just, keep enough out to get a massage and go get yourself centered and send me that money so you don't have to worry about it anymore. And 20-something years of doing this, at least publicly doing this, my public career here, no one's ever sent me any money based on that. Now, as I said quite a bit, you need to ask yourself, is your present self going to make your future self mad? Now, there is a hindsight bias that comes along, and when you do hit that hindsight bias, you need to ask yourself, Did you really have that information ahead of time? And in a lot of cases, you did, and that's all part of getting better. And I'm going to give you some tips and tricks to help you get better in a few minutes, or at least the next show. And it's nothing earth-shattering. The secret is there is no secret. Now, when you boil it all down, life is making decisions and living with them. And I often make a joke at my wife's expense when I'm in public, but just in case she walks in my office, I won't do it now when I'm speaking at a seminar in person. Life is really just making decisions and living with them, and so is trading. And that's why you've got to figure out, or you could be able to live with the decision as if you make it. And you could do that by picking the best stocks that you can, or the markets, and then of course trading at a size that you could live with that loss, having no expectations going in and being willing to accept the outcome. So making a decision is very easy, and living with them not so much. Now, lately I've been talking a lot about before, during, and after the trade. And as I said in one of the earlier shows on this, Steenbarger was talking about the fact that different parts of your brain actually work in the analysis phase versus the down in the trenches phase. And then I added to that the after phase, and that's when those hindsight biases tend to come in. But you want to try to mitigate as many regrets as possible when making those decisions, and figure out a way to live with them during. And again, that's where the money management comes in. Now, you want to work hard to obviously avoid regrets. And then the best thing you could do is the post-mortem, and ask yourself, obviously, with 100% hindsight, what could you have done better? Well, that's where the hindsight bias comes in. However, many times, especially after you've been doing this a little while, you'll find yourself thinking, what in the hell was I thinking? You'll realize that the trend wasn't really that good, or market conditions overall weren't that good. So try to figure out ways to get better, and then also use a lot of deliberate practice when you're doing your analysis. If you see a stock take off, ask yourself, could I have caught that move? And then more importantly, should I have caught that move? If the stock just goes straight up, I see some of these crazy stocks go up 100% or more in one day, and it's like, well, it really wasn't one of my setups, so I just have to let that go and not stress over it. But as you're doing your post-mortem, you have to eliminate, obviously, any true hindsight, and then find some foresight in hindsight. Ask yourself things such as, was the trend really that great? Was it accelerating? Was it persistent? Or was it a major transition, possibly a bow tie or a first thrust, some situation where you're going from lots of downside Landry light to lots of upside Landry light? That's one question I was asked over the weekend in the panels, is what would it take for me to get bullish? And I believe we were talking about Bitcoin, but then I also was asked the same thing about the S&P 500. And right now we have a lot of downside Landry light. When we start seeing upside Landry light, possibly, let's say using a 30 EMA, which is my favorite at the moment, then we might start looking to get long. Now, by major transition, I mean something like a bow tie, or again, some Landry light coming off of those lows, some upside Landry light coming off those lows. Now, the other question to ask yourself is, what's the net price move? Well, lately, we're banging out new multi-year lows, so the net price move, today notwithstanding, is negative. So the trend is still down, so obviously you don't want to catch that falling knife. Now, of course, ask yourself, was the setup really that great? And many a times your answer will be no. And that's okay. You're like, okay, well, I'm going to work to get better at this, so I'm not the definition of insanity, as per Einstein, doing the same thing over and over and expecting a different outcome. Now, was the pullback deep enough, but not too deep? Was there no meaningful overhead supply that could possibly limit your trades? Were there gaps against the trend, assuming this is a long, especially within the setup? Now, the only caveat there is you will get some gaps against the trend and against your setup in something like the energy stocks or something that's commodity based. But for the most part, you don't want any gaps against your setup. Now, a couple other things to look at is, was the pullback below the prior pullback high or base? Meaning that the stock or other market breaks out, pulls back in, and then maybe takes off a little bit and pulls back. But in hindsight, you'll notice that it was right into the prior base. Was it FOMO from a bad perspective where you just plain old fear of missing out and you felt like you had to take the trade? And part of getting better at trading is willing to let it go, like the song, let it go. And if it takes off without you, so what? Be willing to say, hey, you know what? It was mediocre at best. And there is some pain of missing out, obviously, which I call the POMO, P-O-M-O. And just make sure that it wasn't, the trade wouldn't have been based on FOMO. If a mediocre setup takes off without you, you just have to learn to live with that. Now, one thing that's sort of a true enlightenment is when you're looking at your trade in hindsight and you see something and say, you know what, that stock looked fantastic. That was a fantastic setup. It looked fantastic. It just didn't work out. And it, often spelled with a silent SH in trading, happens. And I believe that's really when the true enlightenment comes in. Now, you need to ask yourself, was the overall market headed higher, lower, or sideways? And unless you really like the setup, as I'll point out in a few minutes, then if the market's going the wrong way or sideways, provided, of course, it's not something commodity related, like that little stock I showed you earlier, that's a gold stock. Little spoiler alert on that, the mystery chart. I think it's worth taking as a trend against the major trend. And you want to also ask yourself, how was the sector doing? And not only sector itself, but you want to dig down into your database and look at the other stocks within the sector. So right now, and I'm not super crazy excited, but I do see quite a few gold stocks setting up, and the sector itself is also set up. Now, sometimes the sector will set up itself, and then the stocks within the sector might not look fantastic. And that's because maybe a few stocks that have a high weighting in the sector are making the sector look better than the overall sector really is. So the more sexy brothers and sisters, depending on what you're into, and as Dennis Miller says, if you're into both, you're a little greedy there. He was a little bit more rude than that. But anyway, you get the idea. If there's sexy brothers or sisters within the sector, then you should likely trade. Now, I did a course on stock selection, and it was 14 hours total. And 90% of stock selection could probably be summed up in this slide. If you come to the weekend charts and notice what people ask, or notice my reply to when they're asking about a stock, I would say 90% of the problems with stock picking are on this little summary slide right here. A lot of times I get asked about a stock that's either trending in the wrong direction or electrocardiogram, so that looks like this, as opposed to a nice persistent trend, either higher or lower. Trend acceleration, another big problem. I see a lot of people want to buy a stock that looks like this. It looks like it's slowly losing steam. Yeah, on a net basis, it's higher, but it's losing steam. Ideally, you want to see something that's accelerating higher. The net price change, is the market or stock or Bitcoin or crypto or whatever you're trading, is it higher, lower, or unchanged from where it was? And you'd be surprised at how many people try to make things happen that don't exist. And there's actually a whole psychology in that I've talked about quite a bit. And the more successful you are, the more you would try to make things happen, because you are a person of action if you're successful. But a lot of times in trading, sitting on your butt is the thing to do. Now, obviously, you want a stock that trades cleanly, that tends to thrust, pull back, thrust, pull back, thrust, pull back. And then hopefully when you get on board, rinse and repeat. Earlier I said, did the stock pull back below its prior pullback? So you've got a nice pullback breakout, and then the stock comes right back in. Kind of looks like a little reverse shark. Take a look at the base breakouts. Is it a base breakout? Pulls back a little bit, kind of along the lines of this pattern here. Or does it break out and come all the way back in? I see people want to buy stocks that have come all the way back into the base. Well, you're back to sideways mode. Remember, never forget about your net price change. When that occurs, as I said earlier, does it have gaps against the trend or some sort of overhead supply? So let's say You're looking at a setup, it looks fantastic. You got a nice little pullback, little thrust from lows, whatever the case may be. And then all of a sudden, you look backwards on the chart, and you notice there's a whole lot of overhead supply. People ask me all the time about a stock, and then if they would just back the chart out a little bit, they'd see a plethora of overhead supply. So this is going to possibly limit your gains. Anybody who bought the stock might be looking to get out at break even. Now, documentation is the secret to getting better at all this, especially when it comes to your mind on trading. So ask yourself, what are you seeing that no one else is? And somebody over the weekend, and I forget who, it's so hard. I heard so many great things from so many different people. It's hard to catalog it all. But somebody said, anytime you make a trade, assume that you're making that trade against a professional. And I would take that one step further and say some sort of fantastic professional is going to be on the other side of the trade. So do you think about that? What's the other guy know? Am I the greater fool? Okay, when I'm placing that trade, and is he dumping this stock on me? So what are you seeing? And at the last minute, I added this in that no one else is seeing. Well, my time is already up here. I appreciate you guys coming to the show. I swear I'm going to flesh this out in some more detail next week and give you some tools to help you overcome some of these obstacles of trading. Again, if you need to reach me, davelandry.com/contact. If you want some follow-up information, davelandry.com/StockCharts. I want to thank all you guys for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.